Mira Business FM.
It's the morning drive here on Mira Business FM. Welcome to the program. If you've just joined us, gold is still on one of its most stable bull runs in years. That's been the phrase, or at least it was, until just over a week ago. It's corrected, but there is still wide demand from institutional and retail investors. Having a look ahead at the week for gold, here's Jeff Rhodes. He's the CEO of Goldstrom Advisory. Jeff, we missed you on Friday. Welcome to the show.
Yeah, good morning. Hopefully you can hear me from here in a very chilly Broxbourne in Hertfordshire in England.
It's nice to see you. I can hear you. I can see you loud and clear. Good to chat to a friend of yours, I have to say, on Friday. We were talking to Alain Baron from Numismatica Genevensis. Good conversation, Jeff.
Yeah, very good. Alain is probably the most knowledgeable person I've met, and certainly in terms of gold coins. And he has a lot of good things to say. And I'm proud to know him, actually. Until I came across Alain, I had not a clue really about the added benefits of investing in coins, which of course you have the gold, but equally you have this benefit of perhaps, as we talked about before, Tim, having something rather special in terms of coins. And sometimes, you can be lucky. And just near where I play golf here in the UK, there was an antiques roadshow on Saturday,
Right.
and I almost called you up to say I'm looking for some old coins, but there weren't any.
Well, I have to admit, I mean, I talk to you about gold. I have a vague sort of knowledge, and we tap you for the real knowledge, of course, but I had zero knowledge of gold coins. But I can see, Alan's enthusiasm in that, it's a tangible asset you can hold. They're often really attractive, and the really old coins it's a legacy thing. It's part of history. It's just who touched this? Was this did Julius Caesar pay for grain with this? I don't know. There's all of that aspect as well.
Could well have been, and that's the, as Alain always says, with gold coins you have a double whammy. You have the benefit of owning gold, but also you get this additional benefit where you can pick up really good premiums. At the moment, there's the focus is on kilobars with central banks is large bars, and even retail is smaller bars. Of course, there is a slight problem in the UAE that sovereigns, which are the really the most famous gold coins in the world, unfortunately are subject to VAT and import duty because they're below that 99% threshold for the definition of investment gold. But legal tender coins, I think, deserve to be treated the same way as bars and large bars, kilobars, etc. So, but enough of that. I think it was great that you spoke to Alain, and I look forward maybe to look, coming across other different aspects of gold. It's not just about buying and selling; it's lending, it's borrowing, and I think certainly as far as the UAE is concerned, one of the big developments, of course, is with the Dubai Multi-Commodity Centre, which is now going to incorporate a financial arm to it, which is great. And I do believe that we're about to see a new contract on the DGCX, Dubai Gold and Commodity Exchange, which will be denominated in UAE dirhams, which would be great. It really would be a major development for the UAE.
It really would. Let me just ask you, before we get on to your latest report this morning and what you think of the week ahead. You're in the UK at the moment. Is this just a golfing trip, or is there a little bit more to what you're back for?
No, there's a birthday involved in that. So but golf on Wednesday.
All the best with that. So look, Jeff, the gold price, let's take a view of a week or so, a little bit more. October the 21st, gold hit its high, 4,400. It's much talked about. Halloween, last Friday, gold trading just under $4,000 an ounce. This morning, it's trading just a smidgen over $4,000 an ounce, or at least it was a little while ago. General thoughts, first of all?
Yeah, look, I think it's doing very well. I had expected a pullback, as you know. Um, I'm almost willing to say we've had it, although I believe over the next 2 weeks, we're not going to know about the real strength of gold until the US government goes back to work. Let's not forget that we haven't really seen any meaningful US economic data for over a month since the government closed down. And while we do see the occasional private report, there's nothing from the official sector coming through. So we don't really know how well the US economy is doing. We did have a relatively hawkish commentary from Jerome Powell after the Fed hiked its rates by 25 basis points last week. That was inconclusive, and I do believe we need to see a resolution of what's happening with the US or governmental budget to know whether or not this is still kind of just safe haven buying or really a continuation of investments, as you say, Tim, not just large scale, but also retail and central bank. So there's buying across the board. I just wonder what will happen when the US government goes back to work. If gold holds on to its rally, then I think we're in for a strong end to the year. But still don't discount the possibility of perhaps a move down to 3,750. But it is looking good, I have to say.
It is. I mean, you predicted, 10 days ago, 2 weeks ago, 3,900, 3,950. We've pretty much seen that. So I am a man that puts some trust in you, I have to say.
Thank you.
Let me just put a couple of things to you, Jeff. There's
Yeah.
lots and lots of analysis, as you're very well aware at the moment. There was a Reuters poll recently. Gold's winning streak is seen extending into next year. Analysts forecasting an annual average above $4,000 an ounce for the first time, as economic and geopolitical turmoil keep the metal's safe haven allure intact. Another poll recently, 39 analysts and traders returned a median forecast of 3,400 per troy ounce of gold for 2025, up from 3,220 in July. But they expect prices to average 42.75 in 2026, which is up sharply. Lots of the banks are forecasting $5,000, maybe 4,600, around about there. HSBC, Bank of America, UBS. It really is. It's a very positive outlook, is what I think. I'm reiterating.
It's super positive. The problem with all of that, it's going to be a very crowded trade.
Yes.
Because everyone is bullish.
Yeah.
And the real world doesn't have 100% bullish. And so let's see. But I'm one of the crowd. I'm not so extreme, but to have an average price of 4,200, 4,300 is pretty bullish, I have to say.
Right.
And it probably suggests a high, maybe 6,000. Really could be. If you're going to have an average of 4,300, you're going to have a high well above 5,000. I'm willing to go with 5,000. I think 26 will be good for gold. I think 27 will be good for gold. But then Mr. Trump, or President Trump, becomes Mr. Trump again,
Right.
unless he finds a way to have yet another term in office. Now, can you imagine that, Tim? a, a third term of Trump, gold will be 10,000 by then.
It would be more than smiles on your face, that's for sure. But it's interesting.
I'm not so sure, actually.
No, I know.
I actually like a market that gives both sides the chance to play,
Right.
not one-way traffic. Yeah.
Look, HSBC, Bank of America, 5,000 by 2026, possibly. UPS reiterating, and this is what's interesting in this, I think, their 2025 target of 4,600, maybe even 4,700. ANZ, 4,600 by June next year. Goldman Sachs, very much in your territory, predicting 4,900. Societe Generale saying the same, 5,000. The smart, shiny money, Jeff, if you'll excuse a really terrible pun, really does seem to be pointing northwards.
It does. It does. And so I think generally, uh, can you imagine if we just go back not that long before Trump took office, and gold was just above $2,000, and for a long time was languishing between 1,000 and 2,000. So we're in a time where it's, if you're involved in the gold business, which I am, it's a bit like, making hay while the sun shines. Really, I'm very happy. I'm happy, but I would like to see a little bit of equality with the jewelry sector.
Yeah.
The jewelry sector has been having a tough time, but I have to say, talking to my friends and colleagues in the gold suit, they are actually doing very well. So, despite the fact that we've got record high gold prices, demand for jewelry, certainly in Dubai, is strong.
Let me talk to you about the gold and jewellery sector for a moment. We've got a question in here, Jeff, from Shanti, who lives in Dubai, who says, my mum has passed down a lot of gold jewellery to me, and she died, sadly, last week. God rest her good soul, says Shanti. What's the best advice of what to do with it? It's jewelry I wouldn't wear, nor would my daughter when she grows up. Do I sell it? Do I keep hold of it? I'm looking to buy a property, and the money might help towards that. It's a dilemma, isn't it, I guess? Please help, says Shanti.
Well, first of all, condolences for Shanti's loss.
Indeed.
Yeah, I think that's the main thing. Look, it's quite common, not just with Indians, and there are other nationalities, particularly the Europeans, who will have gold jewelry, they have gold trinkets and so on, that they don't really want. It depends what it is. I mean, if it's really a piece of beautiful fine art type of jewelry, then I wouldn't sell it. If it's not, if it's just like chains or bangles and so on, and something that you wouldn't necessarily keep, you know what I would do? I would trade it in either for some new jewelry or something else in gold, because in Dubai, it is the most effective place in the whole world, the effective market, if you want to swap old gold for new gold, old jewelry for new jewelry, and you get the full value of your gold in Dubai's gold souk. If you've got 100 grams of gold jewelry, you're going to get 100 grams, and you just pay the making. You'll get the value for the 100 grams, or you just pay a making charge. So if you don't like the jewelry, I wouldn't sell gold at the moment. We've just spoken for the last 20 minutes about various experts around the world talking about gold 5,000, 6,000 plus. So I don't see any reason why you would want to sell your gold unless you need the money. But also, don't forget, you can swap gold. You can actually swap it in for dirhams. So you can do that. But I'd stick with it. And if you really, really, really like gold and you do like jewelry, just go and get yourself some new jewelry in the gold suit.
When would you consider selling then? I guess that would
Never.
be Shanti's. Well, I know you would be the same, but assuming you did sort of look ahead and think, okay, I'll keep it for a while. If that's Shanti's decision, I know clearly it wouldn't be yours, but is there a point at which you could say, well, I might think about it then?
Uh, no,
You're going to say no. I knew you
no,
would.
It's look. If Shanty needs the money,
Yeah.
then it's not about the price. You need the money, and you can take it in. And there's multiple places where you can take it in Dubai, and you will always get a very fair price. So if you need the money, it isn't a question about gold. You need the money. You need the money. So,
Sure.
but what I would say is, if you are going to do this, there isn't anywhere better in the world than Dubai if you wish to cash in your jewelry. And there are many, many outlets, and all the jewelry shops. They will also buy gold from you, and they'll buy it at a very competitive price.
Shanti, that's the advice. And as ever, with Jeff, pretty decent advice, I have to say as well. Can I just put forward a potential possible, and you kind of referred to this just now when we were talking, Jeff, perhaps a gold rate forecast for the next 5 years. If you were to look ahead to 2030, slightly beyond, projections span a pretty wide range from 4,800 to as high as nearly $9,000 an ounce. Most consensus targets, as you, I think, quite rightly agree, cluster around 5,000 to 6,000 if current inflation and uncertainty trends persist, and that seems likely. Is that paragraph a reasonable thing to say at this point in time?
It's reasonable, but looking at a 5-year strategy.
Yeah.
That takes into account Donald Trump not being in office.
Yep.
And if
Possibly.
Donald Trump is not being in office, for me, the most bullish factor in the market today is Donald Trump's approach to the presidency, which is really shooting from the lip, and the uncertainty that he creates just the way he governs. Now, if we go 5 years forward, President Trump will be Mr. Trump, and I'm not so sure with the possibility of 9, 10,000. I wouldn't be surprised to see in the next 2 years, maybe 6, but it could well stabilize between 4 and 5,000 in 5 years' time. I wouldn't be surprised to see a gold price of 5,000. So
Okay.
higher in the next 2 years.
Right.
Then I think I'm not convinced, but I wouldn't be surprised to have a period of stability, just kind of trading in a relatively narrow range. I don't think we're going to see year after year after year of non-stop buying. I think at some point the central banks will say, yeah, we've got enough.
Yeah.
And same with retail and wholesale. So I think, as I say, next 2 years, extremely bullish. After that, neutral.
All good things must come to an end, I suppose. Let me ask you about silver, Jeff. Bank of America sees silver hitting $65 by next year. Biggest drop since 2011, though, more than 7% the week before last. What do you think in silver terms?
Yeah, look, it's been a fantastic move in silver this year. Even after that correction, Tim, silver is up 65% on the year.
Yes.
So the fact it gave 10% up in a sell-off is understandable. Publicly, I've been stating for over a year that silver should be $60. And we're at a high this year of 55. Yeah, I think it's a matter of when, not if, that we see silver at 60. And once we get to 60, it could easily carry on. But we had an extreme shortage of physical silver going back 2 or 3 weeks when we hit that $55 area. But now it's looking good. It really is solid. Lease rates were 30% at one point over the last 2 or 3 weeks, but they're still around 5%. So silver is in what's known as a backwardation, Tim. And the backwardation is when the forward price is lower than the spot price. It's very unusual, but silver is now very much into backwardation. And that in itself, the physical nature of silver means that I'm more friendly towards silver and also to platinum than I'm gold, actually. I think there's more percentage profits to be made in silver than gold.
One of the many things I like about talking to you, Jeff, is the learning opportunity and backwardation. I'm going to try and work into as many conversations today as I can. I have to tell you. Hello, Tim. Hi, Jeff, in London, just outside London. Is it best, Ryan's asking, to buy gold, bullions, coins, or jewelry for investment?
Well, to be honest with you, I would say coins.
Okay.
I would say coins because you do have that extra capability or potential of a rising premium.
Mm.
So I would say, number one pick would be coins. Of course, until I met Alain Baron, Dr. Baron, I probably would jewelry actually, because that does obviously have the benefit of being items of beauty. So, and then bars. But if you're large scale, if you're a wholesale large scale investor, then it is bars.
Okay. It's just that thing, and I'm back to I've been thinking about this over the weekend since talking to Dr. Alain. To be honest with you, the attraction, I can see what he was saying about a gold coin market in the city of gold here in Dubai. One of the things he'd love to see. There's just the appeal of collecting. Maybe it's the sad, lonely man in me that wants to start collecting coins. I don't know, but I can understand the sentiment behind it. I think it is.
Yeah, I know it is, and I agree entirely. I wish over the years I'd, invested more into coins.
Yeah.
So, yeah, I do. Look, either way, gold is gold. I love the thought of gold coins. Love the thought of jewelry and bars. And then when there's bars, probably the last thing I'd want is the large bars. The Italian job large bars that you see. And the great thing about that movie was the end of it, and when they were just perched on the cliff,
Yeah,
and if you moved 1 inch, then the gold would go, and you're going with it. And but the large bars probably good for central banks. And I remember one colleague in the market, famously in Dubai at a conference, said that the bullion banks and the central banks prefer large bars because they're easier to count. And I well remember a very bright spark in the audience offering the central banks and the bullion banks that we can count them for you.
There's probably
True
more than
story.
an element of truth there.
Year 2000, true story, and it was at the Jumeirah Beach Hotel, a conference center. It was the first ever LBMA bullion conference that was held outside of London, and it was great. It was in Dubai, but that was just it's so true and so funny.
Love it. I love it. Platinum, palladium. Let's finish off with a quick look at what you think in those terms, Jeff.
Yeah, both of them are looking good. Both of them also in a backwardation, Tim. Much more so with platinum. It's a steep backwardation. At the moment, lease rates for platinum probably in around the 20-25%. Uh, Palladium is 10% lease rate, so that's in backwardation. It points to higher prices, and that is predicated on the global economy, because really they're both very much industrial metals. And if we have a pickup in the global economy, I see platinum doubling from where it is today. Honestly, palladium is good. That would follow, but both of them, depending on what happens with Trump tariffs, assuming we have a détente in trade around the world, I think the outlook for both platinum and palladium from the industrial side is extremely strong.
Let's just finish off with we're at the start of another week in gold. The roller coaster ride, will it continue? Will we see backwardation? I've already worked it into my first conversation today. What do you think? What do you think for the next 4 or 5 days?
Yeah, I think a little bit more consolidation, to be honest with you, Tim, between 3,850 and 4,050, maybe 4,100. So I think 5 days of consolidation. Silver, I think, is going to find its way back above $50, and you could well see 52, 53, maybe even 55 in the coming week. Platinum, at the moment is just around 1,600. I could see that at 1,700, and I could see palladium following it maybe to 1,600. So I'm friendly to all of them, but gold, I do believe, is in for another week of sideways trading, consolidating, on the 3,885 maybe, and as I say, around 4,100. So not extreme volatility, but enough volatility to make it interesting.
We'll check back in with you on Friday. I know it's very early in the morning with you, and I appreciate you coming on, Jeff. You're still in the UK Friday when you heading back?
Yeah, I'm heading back next Monday.
All right. Well, look forward to talking to you later in the week. And
Okay.
what's the word? Keep warm, I guess, isn't it?
Yeah, that is exactly the word. Keep warm.
It is. Jeff Rhodes, CEO of the Goldstrom Advisory. Look, I always appreciate talking to you, Jeff. All the best.
Thanks, sir.
Thank you very much. It is Mira Business FM. This is the Morning Drive.
Mira Business FM.